Hello, welcome to another trading day right here in Lagos, Nigeria. Here's what's coming up in the next 55 minutes. Kenyans are set to receive Starlink mini package as Elon Musk fulfills promise to Kenyans. And Zambia's inflation rate nears a 4-year high as food prices soar. Plus, oil prices slumped today, reversing earlier gains. And it's great to have you join us. I'm Ladi Williams. Let's get a check on the commodities market now. We're seeing oil prices are down today, reversing earlier gains on news that Saudi Arabia, the world's biggest crude exporter, will give up on its price target in preparation for raising output. And you know what that means. More raising output means more oil in the market, and that's we're seeing that impacting prices. Brent crude down about 1.70%, was a big drop, about 2% earlier. WTI crude $68.57 a barrel, also a big 1.66% jump. So we're still seeing pressure right there in the oil market, but we know something might come and support the prices right there, maybe some kind of supply disruption. But Saudi Arabia is preparing to abandon, its unofficial price target of $100 a barrel at this time. So getting more output into the market, and we're seeing the impact on prices. Let's get a check on metals now. Gold prices, we see a rebound with gold prices today. They were about to scale a fresh high, but we're seeing that pullback there for spot gold was up 0.2%. U.S. gold futures, that was trying to get to a new high, was $2,684 per ounce, and other metals that we track still, holding up. Still resting on what Powell did with interest rates in the U.S. with that big cut. Palladium, platinum, $995 per ounce, and we see palladium still staying above that $1,000 psychological level. Silver unchanged at $31.85 per ounce. All right, let's get a check on what impacts a lot of Nigerians right now. That's food prices. We see the National Bureau of Statistics shows that average price of 1 kg beans, that's the brown one, that's to the 2,574 naira, indicating a rise of about 5.31%. So for beans, they're up about 5.31% month on month. Tomatoes, looking good, down 11%. That's for August. Greek eggs, that's about a basket of 12 eggs there, 1,031 naira, up about 5.48%. Let's bring in Michael now, analyst, financial derivatives company, to bring us up to speed on what's happening. Great to have you, Michael. So we're seeing tomato prices in August not looking bad, down about 11%. What drove that, and what can we expect?
Sorry, can you come again?
Tomato prices, we're seeing a drop there month on month. That's the data from MBS. That's for August, and it's the one that's one of the commodities doing pretty well, that did well in August. What drove the prices down, and what are you expecting?
Yes, of course, we have seen that the prices of tomatoes have come down, and that is purely as a result of seasonality. Tomatoes are normally in season between September and February, and as a result, of course, almost at the end of September. And economics lets us know that when we see an uptick in the supply of a product or a commodity, we are going to see a fall in the price of that commodity. But this fall in price is not going to be sustainable, because both farmers and consumers are at the mercy of weather conditions. There needs to be an improvement in sustainable farming practices regarding the tomato market in order to be able to bring about sustainable prices in the long term.
All right, so what should we expect, going forward? Do we expect more drop there for the price of tomatoes and other commodities?
Going forward, we should not really expect a drop in the prices of tomatoes. Like I said, tomatoes are normally in season between September and February, and particularly also for other commodities. This will depend on trends and movements in the international markets, as well as movements in the demand and supply chain patterns. For tomatoes, like I said, except we have improvements in the agricultural farming practices, and we have better sustainable farming practices, for example, better cold storage facilities, more investment in greenhouse facilities. That is the only way we are going to be able to see a continuous drop in the prices of tomatoes. And for other markets, largely, it will depend on both the international, conditions as well as domestic conditions. And now, as we know, in the domestic, regarding the domestic conditions, Nigeria is suffering from insecurity as well as other factors that are hindering the production of our agricultural produce. So I do not believe in the long term we are going to see such a huge decline in the prices of products.
What are you seeing for December? We know Christmas is coming. Is there any chance consumers will be hedged against higher prices this Christmas? Is it possible?
Yes, consumers can have a safe haven this Christmas against the higher prices of tomatoes, but that is largely dependent on the demand towards these products, helping consumers to be able to mitigate against the price of tomatoes come December.
All right, definitely. We're all hoping that prices somehow come down, because we know it's always easy, for prices to spike up on news, but it gets a little difficult, for those prices to actually come down. But thank you so much, Michael, for giving us those updates on most of these food commodities we so cherish right here. Thank you.
Thank you very much.
All right, so we see the country is grappling with a dual financial challenge as it seeks debt forgiveness amid rising interest rates. The government's efforts to negotiate relief from international creditors, that's highlighting the urgent need for fiscal sustainability in the face of escalating borrowing costs. As interest rates climb, the strain on Nigeria's economy, we're seeing that intensify, complicating the efforts to foster growth and improve living conditions for its citizens. And we see the MPC, they're having to increase rates again. So let's bring in Ahmed Olaito Banu now, MD STL Asset Management, joining me right here in the studio. Great to have you.
How are you doing?
I'm doing okay. At this point, I bought fuel this morning, so I've been in a foul mood all morning. But I'm trying.
Everybody's in a foul mood, actually.
Yeah, every time I buy fuel, I get so
very
angry.
upset.
So upset. But let's look at it this time. We're seeing another hike right now in interest rates, and definitely, it has a way of finding its way back to higher prices. We're trying to tame inflation at the expense, of growth at this time. So, talk to me. How can we manage this? And we're hearing the government talking about debt forgiveness. At this point, what are the prospects of actually getting most of this debt forgiven? We saw the debt stock of the first quarter. It's a lot. What's the prospect of that actually happening?
Okay. Thank you very much, Ladi. So it's quite interesting that we need to be very deliberate in our actions, and that's one of my key focus and key words in life. So as we speak, 54% of our debts are domestic, while about 46% are foreign. And if we're talking about debt relief, I'm very sure we're referring to our external debt. And in order for us to, it's been growing. Just looking at this current administration, sometime last year or early this year, there was about 2.2 billion loan borrowing from the World Bank. There are also indications that they might be going back to the World Bank very soon for another about 1.7 billion. And we're now sitting here talking about debt relief. In order for us to be able to achieve that, based on experience, we have two options. Based on the first option is we're looking at we doing it ourselves. And if we want to do that ourselves, we need to ensure that first we need to reassess our debt profile vis-a-vis our current revenue. How does that look like? If we project that to the next couple of years, where do we see ourselves to be? We also need to look at making commitments towards what we would call reforms, more of structural reforms, I would say, because I would give it to the current CBN governor in terms of how he's been tackling from the monetary side. So we have to start looking at the structural, fiscal side of things. And if you start talking and move further to that, we now start looking at how intentional are we in order for us to sort of block fiscal leakages. We also have to look at that. Then, if you talk about borrowing, transparency is key. Accountability, transparency, our records, how do we make information public, and how do we give everybody comfort to ensure that we're working towards that line in terms of getting everything intact for us to get that debt relief. Another option is for us to sort of tap into what I'll call the apologies, I lost my chain of thought.
No, that's fine, because at the end of the day, when you see that kind of money, you kind of find, when you're trying to understand the level of development and the level of debt, when you're trying to marry that, you see that development is not moving as fast as debt is growing. And I'm wondering if the debt or the monies are used well, then we might not have any issue when it comes to, we will have to be talking about debt forgiveness. If the money is used well, you actually use that money to make more money, so you're able to, sort that out. But let's look at this.
Takes you back to my first point of reassessment of our debt profile and our revenue. So if you link that up, there's obviously, if you are using the debt properly, definitely you're generating more revenues, and you won't be speaking about debt relief.
Right, because I would feel, really irresponsible if I rack up so much debt from, some of these loan apps. And those loan apps don't play. If you owe them and you don't pay, they will broadcast your name.
I won't call names.
all over the place.
I won't call
names.
Names.
Let's look at this recent rate hike now. What impact will that have on, say, foreign portfolio investments?
So for me, February we started this interest rate hike. The monetary policy activities have been very active since then. We've been seeing a lot of inflows into the country from FPIs. It's kind of interesting that sitting back and reanalyzing that decision, I would say it's a positive one. Yes, and I would say, even though analysts and a lot of analysts out there
and experts out there are saying, no, we expected a hold, not
or
another hike.
Decline. But the hike, if you think about it, was a good,
or a dovish hike.
It was a good chess play. Across developed worlds, there are cutting rate interest rates, and if you think about it, if you're an investor in America now, what will you be thinking about is how you can get higher returns, and you'll be looking at emerging markets, and one of the emerging market economies you would most likely consider is Nigeria. And considering that we're hiking our interest rates, which sort of
so are we the next destination for the carry trade at this point?
I don't want to say 100%, but I would give it a very high possibility. And obviously, we know that when FBI starts to come in, dollar comes into the economy, and we know how that stabilizes our exchange rate. So it was thinking about it truly again this morning. I actually said, okay, maybe it was a good one. Then another thing again I mentioned today is could it be holding it could actually be we being a bit premature. We've just seen 2 months of decline in inflation.
And we've seen what's happened with fuel prices in September.
And we just, sort of want to now start holding rates. It would be good to sort of increase it and see how quickly that impact is going to sort of curb that PMS increases and sort of maybe not necessarily further increasing further seeing a decline in inflation, but putting us in a state where probably moderating it a bit, then watch over the next MPC meeting and seeing if we
we'll have the last one for the year coming up. But as an investor, I'm seeing rates going up where I am. Where do I pile in cash now? What sectors do I pile in cash that would favor high interest environment?
So from an investment perspective, I would still play with what we've been seeing happening in the market in the last couple of months since we started these interest rate hikes. Buy treasury bills, buy federal government bonds. I won't play towards corporate risk, and I'll tell you why I won't take corporate risk, because interest rate hikes means higher borrowing costs, and obviously financial finance expenses, expenses and all would also increase, which would also significantly impact profitability. Also would impact operating cash flows, if you think about it from that angle. And obviously, if operating cash flows are being impacted, then it means that there's a possibility that those companies might not probably be doing well, or might struggle after a while. And you've also mentioned something now, increases in fuel prices. And obviously, if fuel prices are increasing, we know how that is affecting consumer expenditure, which would obviously impact the revenue. So if you think about it from a business perspective, we might be thinking, okay, should we be investing, taking on corporate risk, or just stay where we are and continue to take benefit of the high interest rates that the government is actually paying us?
Right, and I've seen in other climes, when prices negatively impact, consumers, they look for who's profiting from that, and they slam them with a windfall tax. I don't know who's going to get a windfall tax right here.
Are you referring to banks?
I'm not mentioning any names. I'm just saying somebody needs to get a windfall tax if the consumers are having to go through pain, when you're making a lot of profit. But thank you so much. Definitely a lot to consider, with this high interest environment. We'll see how it all plays out. Thank you so much, Ahmed Olaito-Banu, MD, STL Asset Management Limited. It was great having your perspective.
Thank you very much, Ladi.
All right, now, let's take the conversation further now. We'll turn our attention to energy prices still, even though we talked a bit about energy prices. What are the prospects for poverty alleviation? At this time, I did speak about windfall taxes on who's profiting from, higher prices, but we're going to find out who's really profiting, really. But joining us now is Mr. Nick Agrule, is an energy expert and a group head, Citizens Charity, joining me from our Abuja studio. Great to have you on the show.
Good afternoon, Ladi. How are you doing?
Great to have you. So we're seeing, I know you're a big player there when it comes to the energy market, but we're seeing prices, a big headache right now for Nigerians, talking about energy prices, eating deep into disposable income. Is there any way this could have been avoided?
Exactly. There are many ways that this could have been avoided. If we had got our refineries working, our 4 refineries working, we could be buying petrol or premium motor spirit, as we call it in Nigeria, at cheaper rates than we have now. If we got electricity working, then a lot of the petrol and diesel that is going into generators would have been saved, and that would have meant we'll have more supply of products at cheaper rates. If we invested and opened up the space for new energy, the sunshine that is out there, the wind, and the water bodies that we have in Nigeria, and are generating electricity at cheaper rates, we will not be having this kind of electricity tariff that we have now. So on all counts, we could do better, and it's not late. It's time for government to begin to put the capex in these projects. And if government does not have the money to do it, and they can just open the space, just like they open the space in telecoms, and we see the growth that is happening in that sector. That's what we need in the downstream petroleum sector, in the power, and in the steel plant, and even in agriculture.
And definitely, with the latest rate hike, is a high interest rate environment with borrowing costs, even going higher. Do you see this also, impacting the energy market at this point, which will tilt prices even higher?
Yeah, of course, it's going to impact, because when you hike rates, then the cost of borrowing goes up, and investors will find it more difficult to, perform their analysis and come up with positive NPVs, net present values for projects. So you find out that project funding is impacted, and even funding for operations is impacted. And I read the statement by the Monetary Policy Committee, and the committee came to a decision point where they said, should we hike rates to help pricing, that is the inflation, or should we look at output growth? And the committee voted for fighting inflation at the expense of output growth. And you know that we cannot continue fighting inflation at the expense of output growth. Nigeria really needs to grow. Our economy needs double-digit growth so that inflation itself can be cured with growth. It's better cured with growth because like the MPC said, food inflation has come down. And why? Because the farmers are putting in more food into the market. So that is a better cure for inflation, trying to get output, to increase output. But again, I understand the difficulty or the challenge that the central bank or the Monetary Policy Committee or the central bank has, because the fiscal authorities, the ones who are supposed to do the hard work and grow the economy, they are not doing their job. And so the CBN thinks that, they can't just let it slide, they have to do something. But unfortunately, I think they are giving too much painkillers to the patient, and the patient is now struggling and on the deathbed, actually.
Definitely, we know the end of the year is upon us. Christmas is coming, at this point. What do you think can be done in the short term to cushion, the impact of energy prices, rising energy prices on Nigerians?
Well, the other aspect that I wanted to talk about is that if you go to other crimes, like in the UK, US, and all of those places, there is the voluntary sector that comes in, especially using the lottery system. You have even governments raising a lot of money and charities raising a lot of money to come in to support and help plug loopholes where government is not covering up properly. And that is why you have things like food banks, then you have, recreational, educational programs. You have all sorts of community help. You will discover that a lot of the monies that charities are even sending to Nigeria are coming from the lottery system. And the Nigerian lottery system hasn't been developed to that point because like in the US, they raised about $100 billion through the lottery system. And the lottery system is owned by the states. So the state governments are the ones that own it. In the UK, the national lottery is owned by the government. It's the government that owns it. And that is one sector that Nigeria needs to start to consider. Already, we have the structures in place, like we have the National Lottery Regulatory Commission, and there are some states that already have a lottery board, and it is an area where citizens come in with very little money, pull it together, and the money is put into development projects and then helps citizens overcome situations like the hardship that we have in Nigeria now.
And when it comes to, channeling, most of these funds, to alleviate the sufferings, at this point, what kind of sectors do you think should be priority, at this time?
I would say that agriculture should be a priority. For me, I'm not very comfortable with the government's approach of importing food because this government came into power probably about 15 months ago or thereabout. And if they had gone ahead to support the agricultural sector and we did a lot of land clearing and then planting with machines, we would have done the harvest already. Because there are crops like rice and all of that that can be harvested within a few months when you plant them. So I would expect that the government should open up that space. And even if we're looking at raising money through the lottery system, that is where money should be invested because, you see, agriculture provides the best economic outcome for Nigeria because not only will it assure food sufficiency at cheaper rates, it will also create a lot of jobs, and then, of course, if we attain food sufficiency, we can start exporting the food, and then it will now help the foreign exchange rate as well because it will turn around things. Instead of us chasing dollars, we'll be making dollars from our food export. So we have everything set up. We have a good climate. We have a sufficient amount of rainfall. We have water bodies all over the country for irrigation and all of that. And then we have the manpower. So for me, that is a sector that is just not being explored, and we are also just fixated with crude oil. And agriculture is just the best game for us.
Right. So, at this time, we have a refinery, from the private sector. And definitely we've seen a lot of people, clamor for our other refineries to actually come on stream. But at this stage, what do you think is the right move, right now? Because, definitely pricing has become a problem, pricing the products coming out from the Dangote refinery. So what do you think should be the next move, right now, so that, 2025, Nigerians can get some kind of succor?
So the whole thing about the pricing of the Dangote refinery petroleum products, for me, is in fact, there was a statement that came up from the presidency, was it yesterday, where they said the president does not want to, or the presidency does not want to get involved in the pricing between Dangote refinery, which is a private sector company, and the NNPCL, which is also, limited, even though owned by the government. And I thought that was not right. The NNPCL has gone to sit between Dangote refinery and Nigerians. And I don't think that is a market. That is not an efficient market. A market that actually determines prices for consumers to have a fair deal is a market that is competitive. And the NNPCL, the presidency just needs to tell the NNPCL to move away, to allow Dangote to interact with Nigerians and other producers and importers of petroleum products so that Nigerians can get the best pricing. How are we going to get out of this for 2025? Since the current government came into power, they have been embarking on policies that they call reforms. I doubt if they are reforms, but if you look at them, number one, they took away fuel subsidy. That's not a reform. The reform will be a total unbundling of the downstream sector and dealing with the 4 NNPC refineries and opening up the space for more investments and also into new energy sources. That will be a reform. Hiking interest rates, that's not a reform on itself. We need to grow the output for the economy at 3% growth. That's rather too small. Nigeria has potential for double-digit growth, and that's what a reform will achieve for us. And they hiked electricity tariffs. For me, that's not a reform. A reform will be to unbundle the electricity sector, bring in investment the way we did in telecoms, and grow output, because the government came in when output was 3,000 to 4,000 megawatts, and the output is still 3,000 to 4,000 megawatts. Why should not expect the government to increase the output to say 10,000 megawatts within 15 months? We are not seeing the projects that are putting in the capex so that in 3 years' time we are going to see the output. So these are the areas of reform. When you reform a sector, you make the sector better, more efficient, open it up to investment, and then get these goods and services provided for Nigerians at far cheaper rates and create jobs and export to earn the dollars.
All right, thank you so much. Always great having your perspective, Mr. Nick Gule, energy expert and group head, Citizens Charity. Thank you so much.
Thank you, Ladi, and thank you to our viewers.
All right, we'll take a break now. When we come back, we're going to head straight to the markets. Let's see how investors are feeling right there. That's in a moment. Just stay with us. Well, as the trading month winds down, that's September, all eyes now on what's going to happen in October. But Anita has the details for what's playing out today. And we're seeing the local boss looking a little weak.
Ladi. Yes. Well, this red color you see on the local bourse, which we normally start with, I think is as a result of some profit taking. Yesterday, the market, in value terms, it gained about 240. That's in Nigerian naira, 240 billion naira, and that translates to about some 0.42% gain. But
and it looks like we're having some kind of resistance, for that 100,000 level for the all-share index.
Exactly. And so far, Nigeria's stock market, it has recorded more than 3 trillion naira worth of transaction within just 8 months. And that shows you that, yes, this stock market, we talk about other stock markets, but charity begins from home. And of course, Nigeria's stock market has been very profitable to both domestic investors as well as foreign investors. So far, year to date, the market is at 32.38%. And month to date, which is just about how many? We have just about 2 days remaining for the 2 trading days for the month of September. And it's up about 2.5%. So,
right.
so it's just a matter of profit taking, and we have two companies in focus for today. We'll be talking about that just in a couple of seconds from now.
Fantastic.
And so, all right, so Ladi, so let's give our viewers the market numbers and the reasons why some of these markets are moving in the color and the direction that they are at the moment. Nigerian stock market, yesterday we saw the likes of Seplat, the likes of Flour Mills of Nigeria, so a couple of news that came into the market, and they were top on the list of 30 gainers, which counted the losses from 24 losers. So yesterday we saw the market even reaching up to 99,000 points, but some pullbacks on the back of some banking sector bellwethers, as well as some oil and gas bellwethers also pull back the market. But intraday for Thursday's trading session, we're still seeing the market making some up and down movement. For the Johannesburg Stock Exchange, yesterday we saw the market at about 85,000, but bracing the 87,000. It has reached the 87,000. Maybe at some point this number has gone back, but the last track that we had here, 87,062.19 points, that's what the number printed at intraday. It was up by 1.28%. And for the other two markets that we track on the continent, we see EGX and the NSI in the green, 0.37% for the EGX 30, and for the NSE ASI, that's for Kenya, 0.23% for the close of Wednesday's trading session. So far, this is for the market numbers at intraday and one for the close of Wednesday's trading session. And so now let's get to talk more about the equities market. Yesterday, we talked about the reaction of the fixed income markets to the central bank's monetary policy committee's latest rate hike, which was 27.25%. And then now let's talk about the impact that it has had, or if it has had any impact 2 days after that announcement was made. And so let's bring in Abiodun Adedotu to give us details about this and other questions that we'll be asking him. Thank you for joining us, Abiodun.
Thank you. It's happy to be here, Victor.
All right. Okay, so now.
Good afternoon.
Yeah, okay. Okay, so now we know that the equities market, sometimes the impact of that rate hike, which is the fifth so far for this year, and that's in the last about 9 months now. How has this latest rate hike impacted the equities markets?
Okay, as expected, it's supposed to be an inverse relationship in terms of rate hike and against market performance. And of course, that's what we are saying currently. The market is slightly down, especially the lenders, the banks. The banks are a little bit underwater. And of course, there's been this kind of concern about not just the rate hike, it's more about the CRR that has been raised to 50%. Of course, based on what has been done in recent times, it's more about 40, 45. So going to 50%, it shows that CBN commitment to continue to sterilize fund in order to maintain stability, especially on the FX side, continues. And we are seeing that affecting the market currently. So bargain hunting move is actually going cautiously as buyers are trying to take a lot of caution, before taking positions.
Okay, so now let's take a look at some equities. Yesterday, Flour Mills of Nigeria, the core investor Excelsior Shipping Company, announced a plan, more like an exit package for the investors there, which made that equity or that stock to go up. So, can you give us more details about this? The plan by Flour Mills of Nigeria with its minority investors as well as its exit plan from the NGX.
Based on the announcement, we're informed that they intend to take minority shareholders out at 70 naira. And of course, they already have no objection from the apex regulator. The stock, I think, opened at around 55. And there's a bit of headroom for investors to make, because if you are buying at 55 or 60, you can exit at 70 by selling to the company directly. But, as you'd expect, it's not a process that you expect to be concluded in one day, but the price is converging towards the target price of 70. And we expect that as we continue to approach, get better clarity and we approach the day this is going to be consummated, the price will convert more. So it's gained a little bit more today, but it's not yet there.
Okay, so now that takes us to Seplat, which had earlier announced that plans of about $1.28 billion deal to buy ExxonMobil. ExxonMobil is one of the companies that's exiting Nigeria's onshore operations. So now, was that part of the reasons why the company's share price rose, or can you give us details about this, the impressive performance by Seplat's share price?
Of course, in terms of Seplat, the news has been there since 2020, 2021 about the acquisition of ExxonMobil assets. Of course, the onshore asset, not the deep waters anyways. And the very first snag that was faced at the time was due to the NNPC interest in some of these ventures because they were joint venture. But we understand that that's been gone. They've gone past all this, and pretty much based on the information we have at our disposal, it's more like the final stage. And of course, there's a lot of value that is going to be accrued to the company upon announcement of this deal. Is a major one. And I think it's one of the reasons why buyers are scrambling to buy the stock.
Okay, so my final question with you now. We've mentioned these two companies, and one of them is from the consumer goods counter, and the other is from the oil and gas counter, which were in the positive terrain at the close of Wednesday's trading session. So how are these sectors doing, the 5 key sectors of the NGX?
I'm sorry, I think I missed that question. Sorry.
Okay, I said we mentioned two companies now, one from the oil and gas sector and the other from the consumer goods sector. That's Flour Mills of Nigeria and Seplat. Now, can you give us details about the sectoral performance of these sectors and other sectors at the moment at intraday trading session?
Okay, all sectoral indices are underwater. They are lower today, except the consumer goods and the insurance. The insurance largely driven by gains in Flour Mill. I think it was trading at about 62 just a few minutes ago. Investors are trying to still take position to be able to make a little bit of headroom gain in that consumer good giants. And of course, we've seen positive movements in Dangote Sugar as well as Unilever. Save for that, others are a bit quiet. Not so much is happening in the oil and gas space right now. Of course, they see demand in Seplat, but we've not gotten sufficient volume to change price to print price for the day. Oando appears to be a little bit underwater in that space. Etana is not really looking so great at the moment. So pretty much, except for the consumer goods, and which obviously it's Flour Mill, there's not so much to be held in the market currently.
Okay, Abiodun, I think we'll leave it there for the close of Thursday's trading session. We'll look out for how the market ends the day's trading. But thank you so much for your analysis on the program.
You're welcome, sir.
Okay, so now let's go to the United States. U.S. stock futures, they were in the green for the start of Thursday's trading, where the market will be opening at 2:30 Nigerian time. And overnight, the market were in the red. It closed in the negative. But for the futures, the Dow Jones Industrial Average 0.48%, S&P 500 futures 0.79% in the green, and NASDAQ futures 1.37%. Now, one of the catalysts that the market will be expecting for the opening bell is the weekly jobless claims report, which is due out later today. And of course, economists are they're anticipating that the unemployment claims, which were filed for the week ending September 21st, will be coming at about 223,000. That's for the initial numbers. And then the final reading of the second quarter GDP GDP report for the U.S. market is, for the U.S. To be precise, will be coming out also at the same time. So that's it for U.S. markets. And finally, for the Asian markets, we also see all of the indexes making a rally. And this is coming after China reaffirming its stimulus measures. On Tuesday, the People's Bank of China had announced a flurry of interest rate cuts and said it would extend its existing support for the real estate market by 2 years, among other plans. China's real estate market has really taken a bashing, and that's really affected the country's economy. So, Ladi, that's it for all the markets, just about the 3 markets around some parts of the world.
So much to unpack there, but we're still seeing the futures market in the U.S. still looking quite positive with that big cut that we got last week. So we're seeing investors still, reeling in the euphoria, of that latest cut. But thank you so much for giving us the details for most of these markets that we track. But let's get a check on what's happening in Europe now. Some parts of Germany are reeling from another flood, and farmers are assessing damages to their fields. A German environmental group is advocating for special insurance to protect agricultural businesses. Lars Holter gives us the details now. So, Lars, what can you tell us about this initiative?
Thanks for having me, Ladi. Well, this idea is interesting, not last due to the fact that it is coming from NABU. That's one of the largest German environmental groups. They're an activist group that has in the past stopped entire infrastructure projects, roads, airports, wind parks, to protect some critters that might have made a home wherever a new project was planned. And they're generally not big friends of the agricultural sector because they see today's farmers as partially responsible for the problems we're having with climate change. But that's exactly why they are advocating for a new catastrophic insurance program to protect farmers against extreme weather events. They're just tying it to some demands. Most importantly, that farmers do their part to mitigate climate change, that they're making a bigger effort to slow climate change and minimize the problems we're actually dealing with. And that, of course, includes flood events as well as droughts, both the kind of weather events that can easily ruin an entire year's harvest. And with regards to floods, in a very short time. Just this year, we've had hundreds of farmers whose fields had flooded and who had to write off their entire harvest of mostly wheat, corn, potatoes, but also sometimes salad and vegetables.
All right, so what can farmers do to, better protect the climate?
Oh, there's a ton of ways farmers can contribute to a healthier climate. The NABU experts are pointing towards a few major points that would include raising fewer animals. That is, of course, mostly cattle, but also pigs, and to a much smaller extent, chicken, because meat production comes with enormous methane emissions, and they're known to be one of the major drivers of climate change, right on par with CO2 emissions. Then there's also the use of fertilizers that should be given some thought. And there's monocultures that environmentalists have long said need to be reduced and exchanged for more traditional farming methods like crop rotation that would strengthen the soil. It would help prevent plant diseases and also create a more diverse environment for insects, which again are hugely beneficial to agriculture itself. So there's a lot of ideas, and the group says that if farmers make a better effort to follow some more environmentally friendly concepts, then they should certainly be better protected against all the other risk their business comes with.
All right, so what are investors looking at in today's market?
Well, it's China Stimulus Day 3. First, we had the interest rate cut, then some minor cuts yesterday. Today, an announcement that Beijing is working on additional measures to stop declines in the housing market, and some more general ways to hit the 2024 economic growth target of 5%. I said it before, analysts see that as a very lofty goal. Anyway, Chinese markets are up once more today. We also have some data out of Germany. German shoppers are heading into October feeling slightly more optimistic, and new survey finds them to be more upbeat about their income prospects than a month ago, thanks to higher wages and German inflation stabilizing at around 2% right now.
All right, thank you, Lars.
Thank you, Ladi.
All right, now, so let's get a check on other countries here in Africa. See, Zambia, inflation, that's near 4-year high as food prices soar. We see consumer prices risen about 15.6% in September from 15.5% in August. You see, corn meat prices are being driven higher by historic drought right there. And definitely see Zambia's annual inflation rate rose in September to its highest level in almost 4 years. as an El Nino induced drought caused crops to wither and drove up corn, rice, and meat prices. We're seeing the prices there, consumer prices 15.6% compared with 15.5%. And in South Africa, there we see South Africa's household wealth grows in the second quarter as an increase in the market value of their assets outstripped that of their liabilities, in part due to a strong stock market rally. And that's according to the central bank right there in South Africa. It says the quarterly bulletin showed that the ratio hit the highest since the first quarter of 2023. And in a significant development for internet connectivity in Kenya, Elon Musk has fulfilled his promise by launching the Starlink mini package, bringing high-speed satellite internet to even the most remote areas of the country. This initiative aims to bridge the digital divide and empower communities with reliable access to online resources as Kenya continues to embrace technological advancement. The arrival of the Starlink mini is set to transform the landscape of communication and economic opportunities. All right, let's get a check on what's happening in the crypto market. We know Hamster Kombat has been trending all day, and we see the market. The market is not really impacted by that listing, but we're seeing most of the coins that we track there. If we can put the color up, we know the color is not as green, but it's a neutral market, 50 points of 100. That's showing that traders are not as bullish. Maybe it's on the back of the Hamster Kombat listing. But from the price I'm seeing right there, investors, most of the players are not so happy. Looking at the price of one token there, that's for the Hamster token, it's trading less than 1 cent. It did list at 1 cent, but immediately dropped to about 0.008 as point. So it's really low. So because most of the players got maybe 2,000 coins or less, but the market generally is still green. Bitcoin, $64,453. So we're going to be looking at some of the headlines now. We see the listing day for Hamster Kombat is listed on Binance and Bybit, but the prices are not looking good. Then we see PayPal, they're enabling crypto buying and selling through their platform, which is quite a big move there for most of the crypto investors that use PayPal. Well, let's talk to Denny Giomoli now, information security analyst at Sony Interactive Entertainment. Great to have you on the show. Yeah, so, you might have to unmute, Amole. Yeah. So definitely, there's a lot of talk right now about Hamster Kombat. It's trending right now. It's supposed to be a blockchain game that a lot of people played for about 6 months. They've done the distribution now, but the prices are not looking good for most of those players. So talk to me about, blockchain and gaming. Is that a thing that's actually going to do well?
The blockchain gaming environment is a new technology, and I think with this type of new technology, we actually need to be positive about it and give it time to kind of make people understand it and how the market really works. Generally, the gaming situation is moving from what it used to be where people just play game for the fun of it. Now is moving into another level where people actually are going to be playing game and they're going to be getting rewards for it. So this is like a first step into a new revolution of gaming. And I think this is really a good thing and something positive that we should look at. At the moment, the prices are really low on the token, and it is not what the gamers expected, because people have already invested their time, putting in the activities and putting in the work to get these tokens together and expecting to get like a good payout. But I think this type of situation is just something that we need to give time, and people need to understand how the crypto market works a little bit more better, and with more gaming opportunities built on blockchains, with more gaming opportunities coming out, I think this type of gaming is going to be like the future. It's going to create more inclusivity in the world. It's going to create like a lot of economic impact, and it's going to create more economical impact, and people are going to be able to earn real life money from actually playing games. So I think it is positive, and it's something that we're looking up to.
Okay, so if you're watching this now, we're going to join the live coverage there of APP rally in Rivers State. That's on DSTV, but we're continuing this conversation on all other platforms. Thank you for staying on. But can you explain the concept of play to earn in gaming?
The concept of crypto in gaming, right?
Play to earn, yeah, play to earn. Because people like to earn money playing games at this point.
Yeah, play to earn in gaming is a shift from the traditional type of gaming where usually we used to, like growing up, we used to go, we used to play games, play FIFA, play all these sorts of games, and we just play them for entertainment. But now the gaming has moved into a different level where you can monetize your time while you're playing games. So now your activities in gaming is actually going to generate you to have to gain tokens, to gain rewards on the gaming platform. And now if you play and you earn money, you earn tokens, and these tokens eventually, since they are built on blockchains, some of this platform and these game producers are going to be launching these tokens, and they're going to be going live just like Hamster Kombat just did, and other ones are available that people are playing, and it's really going well for them. And so play to earn generally is you play games, you earn money for playing game, you earn money for being skillful in your games that you play, and you earn money for interacting and engaging with the gaming platform. So gaming game to earn is a spectacular thing, and it's a big shift, and it's a great advantage for gamers all over the world.
But I don't know if you're following the price of the Hamster Kombat token. They listed today trading at less than a cent, and most of the players are complaining that they technically got dust for all of the work they put into that game. How are you seeing that?
I think, it's quite disappointing for a platform like Hamster Kombat, because they have the world's largest Telegram channel with over 52 million subscribers. I think it is a letdown for the gamers, and I think the game providers and the game producers should actually do more things, put in more policies and more ways or more structures in the crypto system to ensure that, people actually get real returns for the work they do, because it takes a lot of work, because essentially time is money, and people actually invest their time in getting these tokens. And I think they need to actually put in some work into making these tokens actually valuable for the game players.
All right, let's see what happens next. Still early days, at this point, but most of those players are really disappointed. Thank you so much, Adeniji Mole, Information Security Analyst, Sony Interactive Entertainment. Thank you.
Thank you very much for having me.
All right, Sarah, so I know most of the Hamster Kombat players are not happy, at this point, but as the day unfolds, let's see what happens next. But thank you so much for watching. That's the show today. That's how most of the markets are looking there. Thank you for watching. I'm Ladi Williams. I'll be back tomorrow. Thank you so much for watching.